Morgan Stanley are expecting a sharp contraction in corporate earnings to weigh on the S&P 500 this year, and they see the S&P 500 lower at 3,900 by year end. However, Goldman Sachs, they take a different view and they're expecting mild growth in the S&P 500 this year. So, with the path of US inflation still unknown, analysts divided on whether the Fed will hike in June, skip a meeting, or pause rates, and global growth also in the balance, the path for US stocks in June is far from clear. So let's see what the S&P 500 is like from a seasonal perspective. We can see that May, June, August and September are the weakest months of the year, with a bit of an outlier in July. But noticing in June, if we just take a look from the 1st of June to the end of June, we can see that on average, the S&P 500 has lost value 60% of the time. We can see that the biggest drops 2022-2008, and that's a drop of 7.63% here in 2008 and 7.70% here in 2022. And the average return has been a fall of minus 0.43%. So this is a weak seasonal period. So traders should be aware that if there is a sudden bearish policy shift from the Federal Reserve on June the 14th, that could see stocks fall lower in line with their weaker summer seasonal pattern. And that would be if the Federal Reserve announce that they need to do more and they have to cool the US economy by a greater degree, and so they have to hike interest rates even more. That's the sort of policy shift that would send stocks lower. Major trade risks. The major near-term trade risk here is if inflation cools in the US suddenly, and then the Fed announce a rate pause when they meet on June the 14th. That would likely break this seasonal pattern. Remember, don't just trade it, but season exit.